Today is 17th of January, 4:10, about 50 minutes before the market closes. Currently, market actually trade a bull bar up 5 point at 3807 with below average volume. Now over here we have deep retracements after this breakout, and this deep retracement has a bearish gap which is actually negative, and in the process it actually broke the support level and followed by a reaction right now testing this resistance. So this resistance appeared to be quite significant, and that is at about 3824. Now this gap here also offers a level of resistance, and that is at about 3843. Our immediate support is actually at this pivot low here, which is at 3765. This does not appear to be very strong. Breaking this to sell, we may test this support level here at about 3715. If you take a look at the moving averages, it's crisscrossing, so indications that the market is actually consolidating and appear to be quite volatile with the recent swing. Let's take a look at the US markets. This is S&P 500. This week bull bars managed to actually recover and close above this resistance level. If you take a look at the daily charts, it's pretty obvious. We have a couple of swing and managed to actually trade above this support level. 1326 is actually slightly downward pointing, so at best it may actually consolidate sideways, and you have to patiently wait for the swing to get smaller, eventually form a base and look for a breakout, and this probably will take some time. Now on the broad market, it's pretty more obvious. Now before that, if you take a look at S&P 500 with the major moving averages, it actually bounced off from the 100 days moving average. Now let's take a look at the NYSE Composite Index, which represents the 2000 big cap stocks. Very much the retracement, and if you notice, actually it tests the 200 days before it bounces off. Again, it is likely to actually consolidate sideways, and it will probably take some time. So patience is actually required, so it is important for us to scale back positions because markets likely to be choppy. And going forwards, actually Donald Trump is going to take over office on the 20th of January, and his policies may be inflationary in nature, and that actually may dampen the sentiments of the equity market. This is Brent crude. Very strong rally, and in the process itself it managed to actually take out this resistance level here at about $81. Again, at this point in time, the trend remained intact, and this has been a very significant resistance level that's taken out. It's likely to actually test the next resistance level, and this is at about $84, and this has benefited some oil related stocks. 10-year treasury yield, very strong trend, and if you look at the last, if you take a look at the last two sessions, we have big retracement, and this is generally provide some reprieve for the equity markets. Trading above 4.5% is generally likely to weigh down on the equity markets. So we have a deep retracement here, and very often we may see a bounce from here itself. So again, that might affect the equity markets going forward. So you got to be just more selective in your stock selection. Let's take a look at some of the stock we'll be discussing. So let's discuss the blue chip first. This is DBS. Mentioned before, it's probably better for the banks to be traded on the weekly charts. That helps to actually eliminate the noise. Now if you take a look at the weekly charts, you can see very obvious resistance level. On two occasions they were able to close well, and currently it's just trading a small range bar. It will go if it just continue to trade sideways. We like to actually wait for it to consolidate and eventually look for a break on the upside. So this level here is important to watch. This is at 45.44. OCBC, similarly, very nice breakout followed by a pullback. Again, it probably will take some time before you take out this high. UOB, at this point in time, a small deeper setup. Bar high here is at 37.94. You will probably take some time before you clear. So again, patience is required. Let's take a look at Yangzijiang. Now, mentioned in earlier videos that after these run-ups, we notice here we have weaker momentum. Nevertheless, it managed to stay breakouts, but unfortunately appeared to be short-lived, and right now it's actually trading sideways. If you notice a series of alternate black and bull and bear bars, so this is indications of uncertainty. So at best, it may just trade sideways. We also notice that the 1326 start to actually converge, so this is also indications of losing momentum. We discussed type average previously. This is attempting reversal, but unfortunately, due to the market weakness, we see a fairly deep retracement, and this, in fact, it's just hovering just below this resistance level. We will have to just observe what happens, and if we can trade above this resistance level, it will be generally positive. But this stock is probably slightly more sluggish, and is likely to take more time to perform. Sembcorp. This stock is actually stuck in a big trend range, very big trend range, and the swing is now getting smaller, and it actually map out ascending triangle. So again, we like to actually observe when you approach this resistance level here, and this is at about 567 or so. Any break on the upside must be accompanied with very high volume. Notice we had a prior breakout here before. It's just unfortunate it was not able to actually close well, and eventually we see a wide range reversal bar here or increased volume. So it probably takes some time to actually for the stock to actually gather enough momentums to actually break on the upside. Keppel Corp. Again, the stock has experienced a very deep retracement on this day itself, and it's also accompanied with high volume, and this is probably just a knee-jerk reactions. The Fed is trading below 1326 S&P. It's generally something that we do not like to see, and it's difficult to actually trade this on a long side. So at best, you will just trade sideways, and eventually we can see what happens before we take the trade. Now, the better bets, as I mentioned in the previous video, is actually Citrum. This is a very nice consolidation patterns. After the breakouts, we explain the standard pullback. So this is a standard pullback, and it tests the resistance level, which now provides some support before it bounces off. Today it trade a bull bar, but the volume is not high. We prefer a pickup in volume, but nevertheless, it may pull back from here. The fact that we have a low volume, the order of pullback is actually quite high, and during the pullback again, we need to observe the shallow pullbacks to be actually positive, and eventually look for a break on the upside.